Welcome to another S&P 500 analysis. Today is March 4, 2022. The S&P 500 is putting on a big lie to try to get us to look the other direction. In this S&P 500 analysis, we'll look at the sentiment, the market internals, the price action of the major market indexes, the US dollar, oil, precious metal market to see what lie is the S&P 500 is trying to put on us. Stay tuned. Now let's take a quick look at the weekly chart of the S&P 500. As you can see, we have a one-time framing up candle, weekly candle. So it broke this one-time framing down for the last 3 weeks. But the range also contracted quite a large amount. The range is only 137 points for the week and also lost 56 points or 1.27%. Okay, but it also continued to close below the 10-week and the 40-week moving average and also below this multi-year channel. And as you can see, the 10-week moving average is coming down and it's going to be crossing over the 40-week most likely in the next week or two. So looking at this chart here on a technical perspective, on a weekly basis, the trend remained to be down. All right, let's take a look at this VIX and the put-call ratio, the sentiment chart here. As you can see on Wednesday, we saw a day where the S&P 500 was up 80 points or so, right? And you notice that the VIX is actually sitting above that 30 level, sitting at 30.74. And also the put-call ratio is actually at 0.78. So they are both above what we call the fear and risk-off zone. Once you get above that 0.75, we know it is risk-off, and then the market participants are putting on hedges. And also the fear index, the VIX, once you get inside of that 20-30 zone, then we know the market participants are starting to feel fearful. And when you get above that 30, then definitely it is getting very fearful. And when we get up to 40 or so, then it's going to be panicking fear, right? So you can see that right now, you look at this right here, it appears that the market is doing fine. But looking at this sentiment chart here, the VIX, and the put-call ratio, it is not doing fine. It's saying that the market participants are being very cautious and they are preparing for some big downside to come. And here, looking on this internal here on the up-down volume ratio, although on Wednesday we saw a 4.4 to 1 in favor of the up volume. And the AD, the advanced decline, there were 1,536 more advancing issue than declining issue on Wednesday. But other than that, every day of the week, it was negative. And here on the new high, new low, we're also looking at, on Wednesday, there were 127 stock making new 52-week high, while 101 making new 52-week low. So there was a net positive on the new high, new low. But look at on Friday here, and on Thursday, Monday, and Tuesday, they were all, pretty much negative. And although it is not as bad as the previous week, we saw 783 more new 52-week low than 52-week high. But looking on Friday here, we are back again at 138 more new 52-week low than 52-week high. And you notice that there are 274 stock made new 52-week low versus 136 made new 52-week high. And here, looking at the advanced decline line, the cumulative advanced decline line for the New York Stock Exchange, you notice that it closed below this low here today on Friday, right? And looking at the S&P 500, it actually closed above this low. So now we are seeing a negative divergence between the cumulative AD and the S&P 500. Now looking at the NASDAQ, we see on Wednesday as well, it went up. But again, we only saw a 2-to-1 in favor of the up volume on Wednesday, while there was 1,493 more advancing issue than declining issue. We look at on the other day, and today there were actually 2,252 more declining issue than advancing issue, and also the up-down volume ratio was 2.3 or 2.4 to 1 in favor of the down volume. And if we look at the new high, new low for the NASDAQ market, looking on Wednesday here, just focus on Wednesday. Wednesday, there was 76 stock make new 52-week high versus 216 stock make new 52-week low. And that was on an update. So when you have more start making new low than new high, and you have a positive day for the index, that's something is not right. And here we're looking at the cumulative AD line for the NASDAQ. You notice that the AD line is actually closed below this low. And look at the NASDAQ 100 close on Friday. It is above this low here. So again, just like the S&P 500 and the New York Stock Exchange cumulative AD line, we're seeing a negative divergence between the NASDAQ 100 and also the NASDAQ cumulative AD line. Now let's take a look at this daily chart of the S&P 500. As you notice right now, we are still looking at a series of lower high and lower low. So by definition, that is a downtrend. So until the price come up and take out this high here, and that trend will remain to be down. So right now what we are looking at is essentially I have moved the Fibonacci retracement down to this pivot here, essentially using this swing here. Okay, and right now the retracement zone is right here, this 338.2 and the 61.8. So it's between 4,400 and 4,300. Right now, if we are watching the S&P 500 in the coming week and take out this low here, then the 127 would be somewhere around this 39.83 or close to this 4,000 mark. And also we're basically looking at this level here for potential support here. And that's basically what we're going to be keeping an eye out on if it decides to move down on this, below this low. Now on the upside, if it could take out this trend line, then we essentially need to see it. Would it be able to stay above this retracement zone and move up, take out this pivot high here at 45.45, then continue to move up to take out this essentially this 4,600 level. And for the NASDAQ 100, we're also looking at a series of lower high and lower low. So again, it also is in a downtrend. And we also keeping an eye out on this level here. And also I have moved the pivot, the swing on the Fibonacci retracement. And this is the retracement zone now. As you can see, it almost came up to this 38.2. Right now it's breaking below this 61.8. So we're going to keep an eye on to see would it come down and break this 13,000 level. And if it does, we expect it to move down to this extension level. And one of the levels that we are keeping an eye out on is the 141 near the 12,183. Okay, that's pretty much in coincide with this pivot low here. Now, although the 127 does pose some potential support here, but we are not seeing much of a price action from the previous upswing here that does provide any sort of a price level for potential support. So I'm not saying that it could not provide the support based on the Fibonacci extension, but it's most likely we probably see this 141 because we have confluence between these pivot low. Then on the upside, we're basically saying that it has to get above this 382. So it need to get above that and also take out this pivot high here in order to break this lower high, lower low downtrend price action. So the level that we need to keep an eye on is essentially 15,200. And for the Russell 2000, we're essentially looking at this symmetry move here that trades down here to this 1718 level. And that is pretty much in confluence of this pivot high back here near this level here. Okay, so we're still keeping an eye on the Russell 2000 to come down, take out this low and move down toward this 1720 area. And if on the upside, it basically have to take out this trend line, come up to this 2134 and get back into this zone here. And for the Dow Jones Transportation, we're essentially looking at this price swing here for the Fibonacci retracement. And as you can see, that right now we are basically inside of this zone here. So if we break below this 618, we are looking for this 14,133 to break and then work itself down for these extension level here. And one of the possible level is this 141 somewhere near this 13,100. And for the Dow Jones Industrial, we're also looking at a retracement on this swing, and this is the retracement zone. As you can see, it's trying to hang on to the 618, So next week, if we see a break, then we basically looking at this 32,272 area and see would it get below this low. And if it does, then we're essentially looking at this area here at the 32,000. And then we will be looking at this 141 level here for potential support at the 30,800 area. For the New York Stock Exchange Composite Index here is still inside of this consolidation zone. So we'll be keeping an eye to see would it break outside, break below this at 16,094. If it break below this, then we're basically looking at the possibility of working itself down to this 15,775. But if it continue to bounce up, then we could see this 16,708 to get tagged. So we'll be watching to see how the NYSE composite index behave next week. So would it get bearish and then start breaking down along with the other indexes? Looking at the 10-year yield chart here, we see that the 10-year yield pulled back this week here on Friday, and that's probably due to the Russia and the Ukraine crisis. A little bit of a flight to safety, but the Fed chair testimony for this week is already indicated that there will be some tightening to come, and most likely in the next FOMC meeting, a 25 basis point will likely be initiated as a initial hike. So we are still looking at the potential coming up to this 2.5%, and that's basically the Fed is also targeting that endpoint to be 2.5. But we'll see how quickly and how high we actually go from the next FOMC meeting. And here we're looking at the dollar. The dollar finally broke above this 97.79. Remember, that's this zone here we've been watching. And with the Russia and Ukraine crisis going on, we're seeing a lot of flight to safety type of a move and basically buying the U.S. dollar. That's why the U.S. dollar is also gaining strength. And so it's right now it's getting inside of this 98.8, although it did not close above that. So we'll keep an eye on this 98.8 for the coming week and see would it continue to move up to the next zone, and that would be between 98.8 to 101. Definitely with a strong dollar, it's going to be problematic for U.S., especially for U.S. export. So we know the world is in crisis when you see a strong dollar, and then you also see the oil prices go up. Right? Typically, it's a little bit of an inverse correlation there. Right? A weak dollar, we see oil prices go up to basically make up for the losing buying power. And then when you have a strong dollar, then you see the oil prices go down. Right now, we are seeing both going up, with the dollar basically the flight to safety, and also the world is in crisis. Right now, we basically have a shortage of oil, and that's the reason why the oil is climbing in a ridiculous fashion right now. We have not seen these price levels since 2008. Right now, I wouldn't be surprised that we're going to see 120 get tagged relatively soon before we see some sort of a pullback. And when the world is in a crisis, we see the precious metal gonna get a little bounce, and exactly that's what we are seeing right now on the silver. We're seeing silver got above this 2470 area here, and right now we're essentially watching for this 2660. Remember the ultimate level that I'm watching is actually this 2950 level up here. So although I do have some major move, but we'll see how this thing go, because here we have some congestion here, price congestion near the 2667. We're going to wait and see will the silver price get up to that level in the coming week. And here for the gold, we see the price move beyond this 1923 level now. Right? Remember, we saw it shot up and then came back down. Right now it's coming back up and try to test that again, and most likely we'll likely take that out, and wouldn't be surprised that we're going to hear the talking head be talking about $2,000 for gold next week. And then once we break 2,000, then a lot of those talking heads be talking about how quickly it's going to get to 3,000, so forth and so forth. But right now, we essentially is watching for this $2,000 level up here. It's 2024. So we're basically watching for this level here to see will gold be able to come up to this level. And the support level now is basically this 1923. Now let's take a look at the SPY, the ETF for the S&P 500, and see what are some of the levels to keep an eye on for the coming week. Right now, I essentially got the composite profile for these prices here. Okay, and I also have identified this is the value area high at 252.39, and then the point of control for this composite is somewhere around 450, although it's a 449.99. So we're going to round that out to 450. Then the value area low is 426.80. Okay, so those are the key level to keep an eye on. And also have a couple of these high volume node here that I have marked off, 441 and 439.27. And then also this level here, low volume node, pretty much near the low volume node at 421.35. So what I'll be watching for next week, the price action, is to see what will come down to this value area low and then get a bounce. Look for a bounce. If we could get a bounce, then I will target this 439.27, essentially breaking this trend line here, get up to this high volume node here, and see what it continue to move up for this 441. If we could break above that 441, then we're basically targeting this 450, this point of control, this composite point of control. Now, if it come down to this value area low and unable to get a nice bounce and instead reverse back down, then I will target this level here, 421.35, okay, for this level here. And if it continue to break, then this low is in play. So that's basically what I'm looking for on the SPY for the coming week. Now let's take a look at the QQQ, the ETF for the NASDAQ 100. Again, basically I mark off a composite profile based on this range here of the price. And also I marked off the value area high from this profile is 368.70. And the composite point of control, 344.20. And I believe this is 335 and change here for the value area low. So what we're going to be watching for next week is to see will price get a bounce off this value area low. If it does, then we'll be targeting this 344.20, the point of control here, and see would it be able to get a continuation bounce into these high volume zone. Okay, so basically looking for these high volume zone to provide the the runner as a target here. And this right here, if I mark this off, somewhere around 353 here on this level here, this high volume node. Okay, and then you also got this one here at 347.21. Now ultimately, if it could get to the zone here, then the value area high up here at 368.70 would be the ultimate target on the upside. But that will be one heck of a rally if we see that next week. But instead, if it come down, unable to bounce off the value area low and essentially come down, then I'll be looking at this high volume node here as the first target level, somewhere around this 333. And if we break that, then this low here will be in play. So we're basically looking at this 318 area and also this 329 on the downside. Now let's look at the IWM, the ETF for the Russell 2000. Essentially, I mark off a composite profile here using these prices. And here we have the value area high of 207.29. And here is around 203 for the point of control, 201 for the point of control. And here is the 193 for the value area low. So what we essentially going to be keeping an eye on for the coming week. Right now, the IWM is in a bad trade location. So this is a poor location to initiate trade in my point of view. So I'm going to wait to see what it be able to come up, pushes the point of control and tag this and see would it get up to this low volume zone here. Then I'd be looking for some sort of a setup to either get a bounce up to the value area high at this 207 or get a rejection back down to the point of control at this 201 area. Then if it continue down, they're basically looking for a tag of this value area low at the 193. So that would be a couple of the different scenario, right? We have one potential upside targeting the value area high, composite value area high, or one we get a rejection at this low volume zone here and look for a short back down to the point of control and then see could we get a runner targeting the value area low on the other end of this composite. Then the other one is essentially look for the IWM to come down to the value area low, then see will we get a bounce back up, and if it does, then we'll target a long toward the point of control here at 201. But if we see a break below this value area low, then we essentially are looking for this low as the potential target here. So that's basically what we're going to be looking for at this low here, somewhere around 187, 188. So those are the potential upside, downside scenario that I will be keeping an eye on for the coming week for the IWM. Now let's take a look at the ES, the E mini S&P 500 future. I got the market profile chart here. Let me zoom this in here so we get a closer look at some of these, what we call the unfinished business. On Friday, you see we had a poor low from the ES, and also there's a poor low that was left behind on Thursday. Then we got a lot of these single print down here below here, but we also have a point of control up here at 43.64. So there are definitely some unfinished business on the upside and then on the downside here. Now next week, we most likely will continue to see, because also notice that we're at this one-time framing up and the market profile actually on the ES did a one-time framing down. So we'll see on next week, we could see this poor low get taken out and then come down and fill the single print before we get a bounce here. Or, that's the downside scenario. The upside scenario is come up to this poor low and then take out this point of control. Okay, so those are the two possible scenarios. We don't know which direction the market going to go. Nobody knows, but all we could do is basically put up some scenario. If it's going to go up, where could it go? Where would it most likely encounter some resistance or support level if it's going to go down? So that is all we could do as a trader, is to plan on some potential possibility. We could never predict and say the market is going to go up or the market is going to go down. We will basically wait for the market to tell us what it's going to do. Then we're going to use a scenario, say, okay, if it's going to do this, then we're going to be watching out for these level. And if we're going to do that, then we're going to keep an eye on those level, right? That is all we could do as a trader. Now, looking at this volume profile, this is the weekly profile. Basically, I set up the profile for 1 week of price action. As you can see, we have this point of control from just the week that just finished, and also the value area low and the value area high for the weekly profile. Then we also have a virgin point of control up here at 45.04, and also a high volume no at 42.40. So what I'm basically going to be watching for next week is to see what it come up, tag this point of control, and then push it down, break this value area low, and then push it down to this high volume no and get below that. Remember, we have some single print that need to be filled down here from the previous chart, the market profile chart that we just looked at. Right, that would be the downside scenario. But for the upside, if it come up on a point control and pushes above the value area high, then I'd be looking to see would it be able to get above this and pushes into this particular value area, right, from the 3 weeks ago, and see would it make its way up for this point of control here on the 4,500 area. So who is this market trying to lie to? Looking at the VIX here, we see the VIX is actually putting a higher high, while the index here is putting a low here. And a lot of people think this is the low. There's no way that could be the low. If the VIX is still continue to climb, that means there are more fear building inside the market. So we are seeing that the market participants are preparing for some bigger downside to come. Because looking at the put-call ratio, we're also seeing put-call ratio, a lot of hedges are being put on, because right now on Friday, it closed near 0.9. So we know as soon as it get above that 0.75, a lot of market participants are putting on hedges, and when it get above 1, and that implies that a lot more put is being purchased than call, and that's when the market participants are betting on the downside. So right now, with the fix and also the put call ratio, it clearly indicates that we most likely will see a lower low to come in the future here. Be sure to smash the thumbs up to give it a like and to help promote and share this video. Thank you for watching and stay safe.